Today is May 20th, and right now it's 4 p.m. The market just closed, which marks the beginning of LK's final act before possibly saying goodbye to US investors. It also marks the end of my LK journey. And over the past 40 plus days, since I purchased the 100 put options, I really spent a lot of time researching about LK. And this journey really rekindled my interest after being away from it for almost a decade. Previously, I majored in finance in college and I worked in the investment consulting industry for 5 plus years. But since then, I have chosen a completely different path. And for over the past 10 years, I did not follow the stock market. And the reason for me stepping away was in the financial industry, there was just so much that's out of my control. Because what I saw in the industry is a lot of money managers, they all had something in common, which is the ability to justify a decision by a completely reasonable and logical reason. But upon closer inspection, it has no cause and effect relationship with the conclusion that they actually came out with. It was justified after the fact. They already came out with a conclusion and pick out information from the market to justify their conclusion. By that time, I really just lost direction because I just felt so insignificant in a sea of information I will never be able to synthesize and understand. So I kind of decided to move into a different direction so that I can do something where my personal efforts can have a direct and real impact on the outcome. The Luckin coffee story, which rekindled my interest to pick up my old profession. So even though this marks the end of my Luckin coffee journey, I would like to continue to make videos and research other companies because I really enjoy this process. Today, I just want to take this opportunity to share what I have learned the past 40 days and the outcome of my investment. I think I was pretty accurate with my assessment of the situation and the ultimate result of the LK scandal. And my conviction was shown through my decision to exercise the options while the company was still halted on May 8th. However, the financial rewards was a little disappointing because I did not realize the financial gain that I expected. Now, in hindsight, had I known this was the outcome, I might have risked too much for the ultimate returns. So even though exercising the options ended up to be profitable, the original decision to place such a large bet on a company that has already lost 80% of its value was probably not a rational decision. So the end result is I spent $8,900 on the options on May 8th. If I did not exercise, I stand to lose the $8,900. And after today's trading, I closed my entire short position, which I'll explain later on in this video. And my total gain was a little bit over $8,900. So I was able to recuperate the lost option, but there was not much additional return. So to exercise on May 8th was a profitable decision. However, the previous decision was rather careless, which got me into the dilemma in the first place. So just to recap of what happened today since the opening. So the stock opened around 7 a.m. with a lot of volatility in the first half an hour. The stock opened at 250 and very quickly moved up to 350 when the actual market opened around 9 a.m. And there were a few things that I could have prepared a little bit better had I been more experienced. First of all, I was not familiar with the trading platform from TD Ameritrade, which is called Think or Swim. This morning was my first time using that software, and it did not go well, to say the least. For the first half an hour, I was not able to put in a single trade. Everything I put in was rejected. So I immediately called TD, but the wait time was about 40 minutes. So during this entire wait, I was scrambling around while waiting on the call. The end result is I missed out on the most profitable trading period when trading was not available to a lot of the retail traders and traders from other platforms. So 8 o'clock came, that's when the negative news started coming. So I think that first allowed the institutional players to establish a very liquid market so that the spread between the bid and the ask is not very large. That would allow them to continue to sell with minimal impact to pricing, while also by releasing the negative news, the exchange is sending a very clear signal to tell retail investors to get out. That's basically beneficial to both the institutional owners while protecting the retail investors' interest. So finally, I was able to get on the call with TD. They first told me that shorting was allowed as soon as the market opens, and then I was able to trade options after 9:30. I verified this piece of information the night before so that I could come up with my own strategy to maximize my return. There's going to be a lot of volatility. Somehow this time around, they told me the shares are now considered to be hard to borrow. I would have to comply with a few different criteria before I can apply to short hard to sell shares. And I scrambled around and I was able to meet a minimum account balance requirement and also engaged in an interview with their hard to borrow desk team. So they granted me access to hard to borrow shares. And then I still couldn't put any short orders in. So and then after I finished everything, I found out the shares are just not available. So you cannot short without having a long position already established. So you cannot sell any shares that you don't already own. And 9:30 came, even though options are allowed to trade, you can't open any new contracts. So you can only sell whatever option contracts that you already own. Get out, you cannot establish a new bet. So just to reduce volatility. So after learning that piece of news, all of my previous investment strategies just fly out of the window. The only option I have left is just sit there and try to cover my short positions at a favorable price. I would just be at a huge disadvantage. So I just sat there as a day trader wannabe, using the active trader while looking at level 2 information and listening to YouTube tutorials in the background. I am competing with a professional software, already have all the algorithm that's designed to take advantage of people like me. I would often see a big block of shares at a certain bid price after a few price increases. My natural instinct is to place a limit buy order close or above their bid to make sure that I can fill before price goes up further. So my natural inclination is to place a bid order at or above their price just to make sure that I can fill my order before price goes up even further. But somehow one of my limit orders was filled at a bid price much lower than the large block that's currently displayed on the screen. So I proceeded to look more closely at the level 2 information. I realized this happens consistently with very similar sized buy and sell blocks appearing right next to each other. But when you look at level 2, the buy and sell orders were mismatched to go to different market makers that don't have the opposing order. So for example, if NASDAQ has a buy order for 10,000 shares at the bid price, somebody else would have a 10,000 share sell price with a different exchange that has 100 shares on the bid. But overall, when you look at the active trader and not looking at the details, those two numbers are very similar, which indicates buying and selling activities will happen at that price point. Maybe 145 million shares exchanged hands today, about 60% of their outstanding holdings. And this happens in a matter of seconds. Because there are maybe 5 to 6 different market makers, somehow the mismatch happens all the time, which leads me to believe that is being run by a software. And my suspicion was later proven when I tested this on multiple occasions. Whenever the big block happens, I would always place a buy order that's at least 10 basis points lower. And most of the time, it gets filled instantly. But what really drove me to cover my position is the brokerage firm actually telling me, because of the shares are hard to borrow, they could at any moment decide that the shares are no longer available. And if at that point I still hold a short position on my book, it could be wiped out to zero. That poses a very significant risk that outweighs whatever percentage of gain that I can possibly get from trading my shares against a computer. So as the second half of the trading day progresses to the afternoon, I noticed the volume had come down significantly. And as time goes on, my fear grew, and ultimately at the end of the day, I covered my entire 10,000 shares at an average price of $279 a share. But I still have maybe 15 put contracts that I actually own off a later expiration date, because they told me, well, they can wipe out my shares, they can't really wipe out options. I'm keeping those as a sign of defiance to the big brokerage firm. So that summarizes my day. Knowing that I had the right approach and logic, does give me a little bit more confidence I had the right approach. But the end results also proves that being right is only a very small percentage of the equation because there are so many factors that can play into something that we believe is certain. So I think being a better investor is not just about proving that you're right and have a sound fundamental analysis, but also the humility to always allow yourself to be wrong. I think what really differentiates the savvy and wise investors and the losing investors is that knowing when you're wrong and to change course. Being wise is also what the smart money did when they walked away after exposing LK and gained 80% of the value. They did not beat LK to death and laugh in their face. It showed that they have grace because the majority of the work was already done. They already won and they were rewarded with a very handsome share of returns, while the remaining 20% is only a fraction of their gain. It is actually everything the loser has left. So they will fight much harder for every extra penny that you want to take away. Now let's talk about Luckin Coffee, which is the company that brought everyone together. A lot of what they did was very impressive. I really liked how their brand came together, from their theme color design, their choice of endorser, the use of their technology, and everything came together and complemented very well to fit with their target customer base and their execution in both the speed of their growth and also their ability to raise capital round after round and going public in 18 months were all signs of very, very strong execution. But what they're missing or failed in my opinion, is the most essential element in this business, and that is the compassionate company culture. At the end of the day, they are in the services industry, like Starbucks. They took decades to build their business, and their team members are proud to actually work for the company and making similar wages to other businesses. Their success cannot be built overnight by just burning through cash, but through real time investment into their employees. And over time, this company culture becomes invaluable to their success, and this ultimately translates to the loyalty of their customer base. And let's look at Chick-fil-A, which is the highest grossing fast food restaurant in the United States by opening only 6 days out of the week. And their sandwich, although is not bad, people really go there for the experience because when you go into a Chick-fil-A, you feel different. And I think this feeling is to a human being than looking at a 80% off discount. And another example, the most successful restaurant in China is Haidilao. If you're not familiar with them, they went public a couple years ago in Hong Kong, and their company is now worth over 10 billion US dollars. It's known for their exceptional customer service, and they've been in the industry for about 25 years, and so many people and other businesses try to replicate their model, but no one was able to do it. And the key was they didn't expand. The first 5 years, they stayed true to themselves. Both owners operated in the same store. And later on, when they went public, their head of operations was the first server that they hired when she was 16. And now she is in charge of tens of thousands of employees and hundreds of stores. So a successful organization and culture can nurture and grow people, and why your employees stay with the organization. And with all these successful examples, they all have one commonality, and that is their people as the most valuable assets to their success. Luckin Coffee focuses on technology. Technology is much easier to copy and replicate. And if you look at Luckin's top executives, they all came from a background of a technology company that kind of lacks the human element. The CEO and the chairman both came from a background of car rental company. Two of their board members came from investment backgrounds. Their CTO used to be in the logistics business. Their CMO also came from their car rental company. And now the acting CEO has a transportation. So everyone is very well versed in implementing technology, and that strength showed how innovative their process is, try to manage their staff using technology, and they measure their business by looking at numbers, statistics, and efficiency. But they forgot that they're in the services industry that relies heavily on human-to-human interactions. Based on their approach, maybe they should have franchised instead of managing all 7,000 stores directly and tens of thousands of employees. Or they should have been just a platform using their technology to provide a service to connect end consumers and vendors. It's similar to like a Uber or Alibaba. And I think that model will fit the experience and identity of their senior management team a lot better than trying to manage tens of thousands of people as a number, just like how they treat their own customers. Because when you have tens of thousands of people, it becomes a very complex human network. And for a human network to naturally grow, it takes time to build trust and nurture relationships. When you're artificially growing at a speed of right now 10 stores a day, a lot of that is being overlooked. People become just a number. This identity is shown through every single process of their business. And you also see this through the behavior of their customers. Their customer base is not loyal compared to Starbucks. Even though they have 10 times the downloads of Starbucks app, their overall active user is only 1/10. Why is that? In a lot of their stores, you have to use the app to place your order. When you're standing right in front of the staff, you still have to place your order through a phone. You create an artificial barrier that intentionally cuts off human-to-human interaction. They treat their customers as a statistic. So the workers, they derive nothing else other than an hourly wage because they're making coffees for faceless customers. Other than the hourly wage, they will not be rewarded by seeing a satisfied customer or someone giving them a praise. And over time, and they can lose motivation very quickly. And even though they're using premium ingredients while having world famous recipe, and the quality of their coffee will be inconsistent. And their staff members will not be prepared to handle any complaints or have any problem solving abilities when situations occur. Because this whole time, they were just a part of the app doing something that's mechanical, finishing the final step of an electronic order. And then on the other side, the customers also receive a rather mechanical experience because there is no human interaction, there's no physical exchange of money or eye contact. And everyone just becomes a number. And just like how they classified all the customers through their complicated algorithm to assign everyone to a group with a number of other faceless individuals who exhibit the same buying behavior. So to Luckin Coffee, the customers are just numbers. And to the customer, Luckin Coffee in turn becomes a number. And that is a percentage off coupon that shows on the app. Because other than the monetary incentive, they have no other reason to visit Luckin Coffee. And now I wonder, had they slowed down their growth and actually cared enough to build their culture, maybe today everything is different. Because then they would allow time for their culture to naturally grow and develop employees that will care for the company. Then maybe when they expanded into new locations, the employees will not be spending recklessly and just trying to reach a quota to open stores at locations that are competing with each other and at a rent that's way above market rate. And also the senior executives, had they really cared about people, they would have shown a little bit more empathy before they decided to commit the financial fraud and cheat all their investors out of billions of dollars. And they have not made a sincere apology until the day the SEC announced that they would be delisted. And maybe by then, they would understand the SEC gave them more than enough time for them to actually come through. And they would realize the SEC delisted them because they did not show that they actually cared. When our greed overcomes our compassion, the brokerage firm can take away our shorts and options, and they can wipe our account clean as long as they warn you ahead of time. And the SEC can also kick you out of a human network that they have worked so hard to restore. And maybe outside of this self-interest and little financial gain, we could have shown a little bit more compassion. The stock forum that I visit, which is a place to engage intelligent debates and share information, became a place that's filled with hatred and misinformation, with ill intents. Maybe what Luckin Coffee taught us during the past 40 days while the quarantine is going on is to really spend some time and self-reflect to become the person behind Luckin Coffee Anonymous, a faceless power that upholds the integrity of our society, demonstrated by putting in hard work, time, and research in the beginning, and then gracefully walking away to become millionaire. Luckin Coffee did not fail because they committed fraud or their business model didn't work. They failed simply because they forgot that there are humans. So please subscribe to my channel if you want to be a part of this journey and find out more about different companies. And my focus will be looking at Chinese companies that are not necessarily transparent to the US investors. And hopefully I can bring a different perspective. So if you are interested in this topic, please subscribe to my channel and thank you for watching.